What's up guys, welcome to another free stock market breakdown video. In this breakdown, we will take a look at a few instruments where I see some trading opportunities opening up. Remember to drop a thumbs up on this video and subscribe to our channel if you like the content. Also remember to turn on your channel notifications so that you are notified every time we upload a video. Follow us on social media to keep up with our educational content and so you never miss any important market news. All the important links to our channels are in the description below. So let's get right into it. So we're going to kick things off by taking a look back at our previous trade idea from the S&P 500 that we went through last week. So if you guys do recall, I did talk about us having a bounce off of this major level here around the 3,700 point level because it coincided with that daily 50 period moving average, and of course that is exactly what happened, and we were targeting anywhere between a 2.5 risk to reward ratio all the way up to the previous highs, which stood at around a 2.7 risk to reward ratio. And of course we did end up setting an all-time high last week, so that worked out perfectly. And like I said, I do believe that any pullbacks in the stock markets right now should be a buying opportunity because the stock market has been extremely bullish over the past couple of months, and especially with the $1.9 trillion stimulus plan that the Democrats are planning on putting into effect within the next couple of weeks, that should definitely send these markets higher. Now that we've reviewed that trade, I'm going to be talking about another trade idea that I do have if you guys aren't in this trade already. I did mention that if you did want to continue to hold this position, that you should take some off the table at these previous highs. So if you haven't done that and you've closed out the entire position, or if you didn't end up taking this trade, then I do believe that there is another buying opportunity if we do end up getting a pullback into this zone here up at the previous highs which we targeted last time. So if I drop down to the 4-hour time frame, I can kind of make this trade idea a little bit more clear. So what I would be looking for in this trade idea is for price, which has now clearly broken above these previous highs, to come back down and retest around this 3,860 level, and then have a continuation back up to around just shy of the 4,000 point level at around 3,980 points, which is my new target. So we would be taking this trade upon the retest of that 3,860 point level, with the stop loss slightly below this 50 period moving average and the target up here at our mentioned target profit level, which should yield around a 1.7 to 1 risk to reward ratio. Now if you're someone that likes to take a little bit more risk, you could have a little bit of a tighter stop loss to get around a 2 to 1 risk to reward ratio, but just remember that you are decreasing the probability of the trade idea working out because there is a lot of volatility in the markets, and if price does push down below this level to retest this trend line which we have been respecting for a while, there is a chance that you could get stopped out. Hence why I do recommend having the stop loss below this line. But there is an opportunity in this instrument that is worth taking, so definitely looking forward to seeing how this plays out next week. Now moving across to the Dow Jones Industrial Average, unsurprisingly we got very similar price action in this instrument as we did the S&P 500, and if we did take a look at the Nasdaq, it's basically exactly the same as well because all of these US indices are very heavily correlated. So anytime you get a sell-off in one major market, it is highly likely that that will be the same for the others. So basically the trade idea in the Dow Jones is the same as the one in the S&P 500. However, it does offer a little bit larger of a risk to reward ratio of around 2.7. So if you do trade the Dow Jones, definitely I do believe that this is the better option to take between this and the S&P 500, and the trade idea, like I said, is exactly the same. I am waiting for price to clearly break above this 4-hour level which acts as the previous highs, and then take the trade upon the retest, and then the next target for me is around the 3,140 point level for that 2.7 to 1 risk to reward ratio that I have highlighted. So definitely good trading opportunities have opened up due to this massive correction, and this is my top trade pick for this week. So definitely if you are someone who is looking to get involved in the markets this week, this is the one that I highly recommend. Now moving across to the USD Japanese yen, for you guys that like to trade currencies, I have seen quite a significant development in this instrument that has opened up two trading opportunities. One trading opportunity is more of a longer term trading idea that should last anywhere between around 2 to 3 months. and the other one is a short-term trading opportunity that I think may last around a week. But both of them are based upon the same idea, and that is the fact that we have had quite a significant retest of this weekly 50 period moving average, and simultaneously in this instrument we've retested it, as well as this massive daily supply and demand zone that lies here between the 105.4 to 106 level. So definitely this is a significant development, and I am expecting price to continue to fall down from this level to possibly all the way down to around the 101.5 level. So I'm very bearish on the USD yen right now because of all the money printing that the Democrats are looking at doing with their $1.9 trillion stimulus plan that I mentioned earlier in this video. So we could definitely be taking advantage of this over the next few months and make some money in the markets as a result of it. So if I drop down to the 4-hour time frame, looking at that shorter term trading idea, our major supply and demand zone in this instrument is sitting here around the 104.8 level. So what I would be looking for to take this trade idea is for price to fall all the way down here. Obviously there is some volatility that could occur in this area, so the more high probability trade would be once price has broken and closed below this 104.8 level on the 4-hour chart, had a retest of it, and started to head back down towards these lows. So the next supply and demand zone down that I would be looking at targeting is actually down here at around the 103.9 level, and this opens up quite a significant risk to reward ratio trade. And if I just plot it out here now, because I'm planning this trade on screen, it should open up around a 4.2 to 1 risk to reward ratio trade with around a 20 pip stop loss. But we do know that the USD yen is a very volatile pair, and as you can see here, we have had huge wicks that come up above this major supply and demand zone on multiple occasions upon the retest. So we do have to take that into consideration when setting this stop loss. So maybe even we would take a little bit more of a wider stop loss, maybe a 25 pip stop loss, which would still give us around a 3.6 to 1 risk to reward ratio trade. Now remember, price could still wick up here and stop us out, so I would definitely be monitoring the stop loss of this, and personally not necessarily recommending it for everybody else. But when price does break below here and start pushing back up to retest this zone, what I would be doing is monitoring the volatility around that time, and I would maybe even close off my stop loss until I start to get continuation back down. Not a huge recommendation, because I'm not a huge fan of manipulating your stop loss, because it is quite a risky tactic to do. But I do believe that it would give us a little bit more of a better chance of having a successful trade. And obviously the safest option is to take an even wider stop loss, possibly a 40 pip stop loss, which will still give us around a 2.1 to 1 risk to reward ratio trade. So whichever tactic you do decide to take, make sure you're very careful with it, because like I said, because this pair is so volatile, there is a chance of getting stopped out with a tight stop loss. And if you are a person that does take a type stop loss, just make sure you're monitoring it so that you don't get stopped out with any crazy market volatility that could step in. So that's basically the trade idea that I have in this pair for this week. And like I said, over the next few weeks, I will be highlighting more trading opportunities to the downside in this pair, because we do have that overall bearish look, looking at how it looks from the weekly chart in retesting this major moving average. Now moving across to oil, I have been covering a trade idea for the past couple of weeks in oil, because I do have overall a bearish outlook in oil. But as you can see, our trade idea did not get triggered in, because we did not get a break below this 4-hour zone here for continuation to $50. And in actuality, price flew up above this major daily level and has been going higher ever since. And this move, in my opinion, is definitely due to the news of the Democrats making headway in their $1.9 trillion stimulus plan that I've mentioned a few times in this video. So I do believe that we will see oil prices continue to rise. However, I will say that with a little bit of a caveat, and I have redrawn some of the major supply and demand zones, and I have identified this major weekly supply and demand zone up here at around $58. So I am expecting oil to have that rejection that I've been looking for, and I am expecting it to happen up here at around this $58 level. Now, I wouldn't be the one to recommend taking a short trade immediately as price gets up here, because there is a possibility of market volatility like this and price just continuing to push up, maybe even having a massive fake out up here to trap people who are looking to go long, and then price continuing to fall back down below this zone and continuing lower. So in order to prevent us getting caught out on the wrong side of this, I am going to give this a few days and highlight in my video next week exactly what the entry criteria will be for a trade like this, depending on how this can play out. Remember, in these markets, rather than trying to make an assumption that something will happen from a level, because this is kind of like trying to catch a falling knife, very risky, but we do want to highlight specific entry criteria for trades and wait to see how it plays out, because anything could happen once you reach this zone. But like I said, once we do hit this zone, I will have a very bearish outlook and I will be looking for shorts, but price could do one of many things that could change the entry criteria. So definitely keep an eye out for this, and good job for you guys that didn't enter the trade early, because obviously it would have ended up being a loser and we would have got stopped out. But we did have a solid entry criteria and it didn't get triggered, so we avoided taking a bad trade. Now moving across to the Bitcoin chart, definitely one of the more popular instruments since we're in a massive cryptocurrency bull market right now. I am seeing quite a significant development in that Bitcoin's price has decided to continue to push higher in this past week. But as I'm about to show you guys, we are still very overextended on the RSI, and the fact that prices began pushing up is definitely a little bit of a concern for me when taking longs, just because I know Bitcoin has a huge history of having massive corrections whenever we are pretty overextended on this RSI. But either way, I'm definitely going to continue to monitor this situation, and I'm going to drop down to the daily time frame just so that we can sort of see the potential scenarios that could occur in Bitcoin. So the first thing to take into consideration is the fact that we are trading up basically at these all-time highs, and so any long trade that we would end up taking in Bitcoin would involve us having a daily break above this level, a close, and then us retesting it, and then I would be long after this specific scenario takes place. So if we do get a daily candle break and close above here, then I would be looking to take longs. But also remember, Bitcoin is a very volatile pair, and this break above here could easily turn into a fake out for us to continue lower down to this target zone that I've had in my chart for a while at around the $27,000 level. So we definitely have to be very careful, and due to the explosive nature of this move here in Bitcoin, I am kind of wary about taking any longs. So I do want to see a little bit more of consolidation occurring within Bitcoin, possibly pulling back a little bit before having a breakout. That would just make me a little bit more comfortable about taking any serious long-term longs. But as you can see, there are multiple scenarios that could happen in Bitcoin over the next week or so that will definitely paint a clearer direction in terms of where we're going within the next few weeks. Now obviously you guys know I'm very bullish on Bitcoin and other cryptocurrencies in the long term, but in the short term we are in a consolidation pattern, so you have to be very wary about taking longs in positions like this and taking shorts in positions down here. And with that being said, I would say that because there is a long-term bullish outlook, if price in Bitcoin does continue to fall down, that's just a buying opportunity. Obviously my ideal buying opportunity would be down here in this zone, just because if you guys have seen some of my videos, I am waiting for Bitcoin to retest this 21 weekly moving average, but I don't think that that will occur anytime soon, because I am waiting for it to push up a bit into a better correction zone for Bitcoin, and I do believe that this will end up happening at around this level. But overall, definitely not looking for any short-term trade ideas in Bitcoin, because I only like to trade it long. But if you are a person that does trade Bitcoin in the short term, definitely I am short from this position because we are not above this zone. So if anything, just take that into consideration. If you are a long-term investor, any pullback in Bitcoin is a buying opportunity. So definitely take that into consideration before going long up here at this major resistance zone. And last but not least, I'm going to be covering Ethereum, which has definitely been one of the biggest performers in the cryptocurrency market over the past couple of weeks, surpassing its all-time highs from 2018 finally and setting a new all-time high of around $1,760. So definitely another instrument that I'm very bullish on, and we are seeing similar price action patterns that we've seen in Bitcoin in this instrument, but Ethereum has yet to set a red candlestick on the weekly chart, which is giving me the same concern that I have with Bitcoin. And if I pull up the RSI, as you can see, we've been overextended or overbought on the RSI rather since around October of last year. So Ethereum is definitely still in need of a major correction. And if we look back in time, we can see that Ethereum is notorious for these types of volatile corrections. But right now, it doesn't seem like that is happening anytime soon. But if it does begin to happen, I will be keeping you guys posted, because I do have quite a large number of supply and demand zones that I have highlighted here in the chart. We did end up breaking out of this major wedge pattern that we did form to the upside, which is obviously a good thing for people who are bullish on Ethereum. But I am beginning to look at the weakness that is starting to enter Ethereum at the start of today over the past few hours, and honestly not 100% sure, but I do feel as though price could potentially pull back to retest this 50-period moving average and potentially retest this weekly zone here highlighted in yellow, which sits just above the $1,200 level. But obviously I have to wait for a little bit more confirmation. Definitely won't be trading or placing any more long-term investments in this until we get a pullback, but just giving you an outlook on what Ethereum is looking like. It could go either way. Ethereum could continue to push up even higher up until my next target, which sits at around $2,200, or we could get a retest before heading higher. But right now we are not at an optimal trading zone for this instrument, because you would be taking a lot of risk for potentially a little bit of reward in this instrument if you are trading it for the short term. If you are trading it for the long term, then any pullback in Ethereum is a buying opportunity. Basically the same story that it is with Bitcoin. So I'll definitely be doing more videos on Ethereum as we progress through this bull market. So definitely tune into some of my videos so that you guys can see how I analyze these cryptocurrencies. And with that being said, this brings us to the end of our stock market breakdown video for this week. Thank you to you guys who have taken the time to watch this video, and an even bigger thank you to you guys who have made it to the end of this video. I will be doing a lot more of these videos analyzing so many other instruments, so subscribe to my channel if you like the content, and so that you can keep up to date with all the other content that I will be posting. If you found this video useful, remember to support us by dropping a like on the video so that the YouTube algorithm helps us reach more people. And thanks, and peace out.